Good afternoon, welcome to GrainTV. My name is Cody. Today is the 30th Friday for the weekly wrap-up. Let's turn over to the grain hedge trading platform, see where we closed off the week. Corn down 3/4 cent, soybeans down 7 cents on the day, and wheat in Chicago trading a bit lower, down 4 3/4 cents. Let's take a look here at the chart for corn, see where we close off the day. You'll notice that we were able to close on the top 50% of the trading range here. That is positive to see. You know, we've seen these big tails yesterday. We see another tail here today where we traded lower, but we're able to buy back up to the higher side of the range. That to me is positive. We'll have to see what the trading action looks like on Monday, but if we get another one of these kind of trading ranges where we trade down and then we get bought back up, maybe we'll get a bounce here. That certainly would be, it would bode well here for price action, especially when you look at the chart here, because you can really see that since the middle of December, we've really ended this uptrend, and we started this downtrend, and you know, over the last week we made a new low. I wouldn't be surprised if we're gonna pause here for a little bit, either trade sideways or maybe get a little bit of a bounce here next week. We'll have to see. That does not take away the fact that there is risk that this corn market could go lower. I would think that we would need a little bit more fundamental reasons here to really start selling off, but we'll just have to see how that all pans out. Take a look at soybeans. You'll notice that we were consolidating here, and now we've kind of broken through that consolidation. Looks as though we are trending. After we broke through that 991 support a couple weeks ago, you know, it's been very difficult here for soybeans, kind of been trading around that 991, tried to retest it. It turned from support into resistance, and now we're drifting lower here. I'm a little bit more bearish here, soybeans, especially when you look at the fact, actually when you look at the real, the Brazilian real, you'll notice that it is depreciating against the US dollar, and this is during a time when Chinese soybean buyers are really switching their program from the U.S. to South America. When you get the Brazilian real getting more and more or losing value here, what you're getting is more and more competitiveness for Brazil on the global market. Makes it much more attractive to exporters. So this does concern me a little bit when you look at soybean export sales. I know we have had export sales cancellations over the last 3 weeks, but we've also had export sales. Last week's export sales were disappointing with only 14,000 metric tons. However, this week's sales were very positive, booking twice what analysts were expecting at around 800,000 metric tons. So it's going to be interesting to see. We keep getting these kind of wishy-washy, positive, negative news announcements, but in the end here, it looks like the price action for soybeans is lower here. We know that China is switching their buying program to South America. We know harvest is kicking off down in South America, and all in all, it looks as though there's going to be a pretty large crop coming out of those South American fields. So this is going to put pressure on soybeans moving forward. Of course, this is Friday, and oftentimes on Friday we do like to look at the cash basis movements. You'll notice that corn on average here improved about 1.5 cents across the U.S. In the terms of the sectors, you'll notice the river was relatively weak, down 2 cents, and we saw ethanol increase 1 3/4 cents on the week. Let's talk a little bit about the river. It's interesting, basis along the river declined here despite the fact that we actually saw a decline in barge rates. So that does not really bode well, because typically when you see a decline in barge rates, you would see a pickup there in basis because it's easier and cheaper to get grain down the river. It allows them to bid it up and perhaps to get more grain to move down the river. So that didn't seem to move really well together. It was almost a more bearish symbol here for corn, at least over this week. This is kind of just a flash in the pan, though. One thing you'll notice is that the Gulf also declined in basis, down 4 cents on the week. So Gulf declined 4 cents on average. River markets declined 2 cents. A little bit disappointing along the river. One thing that's interesting to note here when you look at the grain barge movement here in 2015, And this might be one of the reasons why we saw a little bit of a decline in corn basis compared to soybean basis. You'll notice that soybeans year to date for 2015, soybeans are a bit behind where we were in 2014, but we're well ahead of pace to meet USDA expectations. So we have the export sales there for soybeans, but you'll notice that year to date we're a bit behind where we were last year, whereas corn, we're ahead of pace. We've moved more corn down the river than what we did at this time last year. And when you look at the weekly totals, you'll also notice that. I mean, we saw soybeans, a little bit less soybeans move down the river in 2015 for this week than we did in 2014, whereas corn, we saw a little bit more corn move down the river for this corresponding week in 2014. So that might have had a little bit of an impact there on basis. When you look at soybeans on average, we moved up about a penny. Basically, crush plants moved up about a half cent. We saw river markets up about 3/4 cent. It really wasn't a big movement, basis movement here for soybeans. So nothing really too much to talk about there. Let's talk a little bit about wheat here before we wrap up today's show. You'll notice that yesterday we touched on that $5 value. Today we touched on that $5 value. Neither day could we close below. Excuse me. Neither day could we close below that $5. But today we got a lot closer to it. I would suspect on Monday we're going to test this $5 value again. If it does hold, this may be an opportunity for prices to rebound a bit here. This is very positive when you move down below $5 and then you close above it. Today, you know, move down below it, closed above it. We'll have to see if $5 support here holds on Monday. If it does, maybe we'll get a little bit of a rebound, but I wouldn't expect it to last for too long. We really need to see the U.S. wheat get more competitive on the global market. There was a tender issued by Saudi Arabia earlier this week for over 600,000 metric tons of wheat, and it's not expected that the U.S. will really win much of that, most of it going to Europe, simply because you look at European wheat, you see the European currency declining against the dollar. That makes it more competitive on the global market. All in all, U.S. wheat really floundering here. One of the reasons why we've seen such a sharp decline over the last really few months. If you have any questions about what we talked about today, give us a call. The number is 877-472-4607. I look forward to talking with you. If you haven't done so already, take a demo of our trading platform. You can get live quotes on your desktop at home and also on your mobile platform, your cell phone or your iPad. It's a great deal. I'd be happy to walk you through it personally. Make sure you feel comfortable setting it up, customizing it to your own trading style. So thanks a lot. Have a great weekend. We'll see you here on Monday.